on Monday, 23rd of Feb, there's no real big news events. Nothing really to look out for, so I've got it noted here. Monday, I'm not really too stressed about news. I can trade freely. From there, we can look at Tuesday. There's also nothing really that's standing out on Tuesday, no red folders to watch out for. But that being said, we also got to be mindful that there's new tariff laws that are coming in, which means a lot of volatility. We all went through this situation where the tariff wars were going on and the markets were extremely volatile. Some people made money, some people lost money. That being said, Wednesday, we've got some red folders regarding the Australian dollar. For me personally, I don't trade anything that correlates, but to those who are trading AUD, USD or something like that, good to note that there's some red folders coming in. We also have at 4 on Wednesday, we've got President Trump speaking, which obviously we know when Trump speaks, the markets move. So that's something definitely to watch out for. He's most likely going to talk about the tariffs and that's going on. So I would presume that the markets will be extremely volatile. So for those holding swing trades or taking longer trades, be mindful that Wednesday we're going to see a lot of movement. Then Thursday we've got at 3:30 p.m. we've got unemployment claims coming out. If this is weaker, then obviously I think our bias would stay the same with the DXY being bullish, and if it comes out stronger than expected, it wouldn't be good. So let's see. Friday, we've then got quite a bit of news. We've got the Canadian dollar news coming out, and then we've got PPI. Now we know in the past PPI is an extremely big news event, lots of movement coming from that, and extremely volatile. So that being said, I think that we can expect a lot of movement this week. That with the tariffs, I think a lot of movement, a lot of money to be made, and we can expect a lot of it. So we are now going to sort of swing over and look at the technical side of things, look at the charts, look at what we're looking at, and sort of gauge from there. So with the DXY, obviously for the last year, we have seen that the DXY has been bearish. Everyone's known it, everyone's seen it, it's nothing new to us. So, with the fundamentals showing us that we are bullish, we can see that the technicals are following it as well. So we have broken this high, we did not close above that high. So, I would like to see price open and just start gapping to the upside. Essentially, this low should not be taken. If this low gets taken, we are then continuing on the bear run. This low, it could potentially be retargeted, retraced to, it potentially bounce from there. We're not, obviously this is all speculative, so we're not always 100% sure. That being said, the DXY, I do believe that we should see some bullish momentum. Even if we're just looking at the technicals, we should see bullish momentum coming from here. So with the DXY being bullish, we can then look at gold. Gold is now a tricky one, because obviously if we look at the fundamentals, we are bearish. If we look at the technicals, I could see how people can see buys here, but I can also see how people see sells here. I mean, if you look at the fib, we are in the levels where price can retrace. I don't technically trade fib, I'm just using this as an example. So we are, technically in the level where price can retrace from. It's difficult to say, but now if you look at it from the outside, tariffs have been announced. What happens with the last time that we saw tariffs announced? People flock to the safe havens. Gold is considered a safe haven, but where this becomes a bit more trickier is gold is at all-time highs. So as an investor, if you're looking to invest into something that is on the safer side, you aren't going to invest into gold if it's at an all-time high, if that makes sense. Now, yes, I do believe that if people start to flock to safe havens, I do believe that we will see gold will push. But in my personal opinion, I would like to see like what's happening with silver and all the other metals. I think those will be the stronger safe havens. But once again, all speculative. We can sort of go from there. But looking at the technicals, I would say that price is looking, you could potentially see some buys coming in here. I would say that this is too strong we should sell off from here. This level has now been taken, can be seen as a liquidity grab because a lot of sellers in this market would have been entering around here with the stop loss above. So what has this been? Stop loss hunt. I think that from here we could potentially start to see price reverse. Obviously, if the tariffs do come in, we will see these highs getting taken out and sort of go on a bit of a bull run again. So me personally, this week I wouldn't be trading gold. I'd be waiting to see what's happening with the tariffs and everything going forward. But nonetheless, still interesting. So looking now at Euro USD, we can see that according to the fundamentals, Euro USD should be bearish. Last week we were bearish on Euro USD as well. Looking at the technicals on the daily, we can see that price is forming really nice structure. We can even drop to the 4-hour and see that price is very bearish. We've taken out these lows, which is good. What I'd want to see now is this level hold and sort of target these lows for the continuation. That's as simple as it is for EURUSD, but obviously it's all speculative, and we have to wait and see now what happens with the tariffs, because if the tariffs are affected and the dollar, let's say, flips bearish, then obviously EURUSD will start climbing again. EURUSD, I would say, is still bearish regarding technicals. We can now look at silver. So, looking at silver on the daily time frame, we are slightly bearish on it. If we're looking at the technicals, I would say that if price holds this level, stop loss, up here, we could potentially be bearish. But once again, if the tariffs are kicking in, all these levels will be taken and we'll see new highs again. So it's difficult to say for sure. But as of right now, according to the technicals, we are bearish. Because why? You can see structure. Let me redo that. You can see the structure here. We have the pullback, structure, pullback. We haven't broken any highs yet, so according to that, we are still following structure. But yeah, silver is a good indicator. If silver starts to push, then you know that it is affected by the tariffs. But I wouldn't worry too much with silver this week, as well as the same with gold. Looking now at NASDAQ, so we'll go to US 100. For this, once again, I am bearish on it. I would say that even looking at the technicals right now, on the daily time frame, we can see that price has respected essentially a double top. We can see that price has respected. We are now looking at structure to the downside. So essentially, if price breaks this level, then okay, we're starting to look a bit more bullish. But as of right now, I would like to see continuation to the downside, taking out these lows, and we should then see a continuation set up. With that all being said, it's wrapping up to be a really, really good week. So a few tips that I can give to you, and something that I'm looking to do as well. When trading, it's always important that you don't sit and jump into the markets quickly. Take your time. Before you get into the charts, go have some tea, take a nice walk, clear your head, and just make sure that you're stable and ready, because oftentimes we jump straight into a trade. We jump on the chart and jump into the first setup. Take your time, approach the markets like you approach anything in life. Take your time and be slow with it. So yeah, one of the tips that I can give you is make sure that you're just aware of all the news that's going on. Make sure you're aware of the tariffs and how volatile the markets can get. For me personally, when the markets are extremely volatile, my trading doesn't change, but my trading targets change. So where a normal setup, I'll have, let's say, 100 points or 100 pips stop loss. Now I would have a 200 or 300 pip stop loss, but my risk to reward is all the same. It's just because the markets are a lot more volatile. Stop loss placement and take profit placement is the same concept, but they become bigger. So yeah, just take your time and really, really make sure that you are being aware of what's happening. But you can trade the markets. These markets aren't anything different, especially when it becomes volatile. Nothing different with it. It's all the same thing. And yeah, head on over to the Discord. I'm in there every single day, you can shout out and say, Gareth, how do I deal with this? And I'll assist you. We've also got a live on Wednesday, so don't miss out on that. Yeah, we're always here to help. So jump into the Discord and check us out. Cheers, guys. Hope you all have a good one, and we'll see you in the next one. Cheers.